I'll tell you what's running on empty.
Recording in progress.
Take a guess.
My stomach.
Oh, Professor, you're killing me.
All right, everybody. All trading involves a substantial risk of loss, and looks like I shared the wrong screen. Let me try this one more time. It's we make predictions. Jack and I both make a few predictions about what might happen in the future, and the past is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining. Hopefully you're entertained. Jack and I are just a couple of dudes that try to get it right. Sometimes we get it wrong, though. So be careful. Any money you lose, you might lose it. I mean, any money you invest, you might lose it. This is trading. Loss is part of the game. So what we got, Jack?
Well, we got a little Rigetti falling a little more.
Market was down a little bit today so far.
It's very soft.
Yeah, seeing some risk in the regional banks.
Yeah. Do you think that's real, or is it just a reason people want a reason to worry right now?
Well, there is a systemic risk that I've been talking about that, there's commercial real estate loans in regional banks. They have outstanding 300% of their net liquidating value. Think about that for a minute. And we're not talking about JP Morgan and Wells Fargo and Regions Financial or, any of those. We're talking about smaller regional banks, and they're a little bit over leveraged.
Yeah, you would think that would not be allowed to get a bank charter to leverage like that.
And
Wall Street can't do that. A brokerage firm can't do that.
And one of the big problems with this is that the interest rates have gone up. And these banks have just been, instead of putting them into foreclosure, because that would be a real problem, because then you got to find a buyer, and this has all been brewing for the last 5 years. Right now, they're just kind of punting the ball, just kind of keep kicking the can down the road, so to speak, hoping that Trump can get the interest rates lowered. And Trump is keenly aware of this, being a real estate guy, that this is a real problem and that there's systemic risk here. We're talking about on the order of like $1.6 trillion in real estate that's sitting there due, that needs to be rewritten for another term. But the high interest rates make that unrealistic for a lot of the people that have these loans. And in the next, I've been talking about this for a few months, and in the next year, we're going to have to do something's going to have to break loose at one point or another. And the real credit risk that happened right now was actually not commercial real estate. It was in auto lending, subprime auto lending. A big subprime auto lender, Tricolor Holdings, went bust a couple weeks ago. And then an auto parts supplier that supplied parts to a lot of these sketchy dealers that dealt with Tricolor, it also went bust. And millions of dollars just went poof off the balance sheet. Western Alliance, this was a bank that had problems during back when Silicon Valley Bank blew out in 2023. They had problems back here. They had $50 million or $60 million worth of exposure to what just happened in the subprime auto lending fiasco. And 50 million of that's probably not recoverable. And some of the shenanigans going on is that they wrote multiple loans. They basically committed fraud and sold the same car multiple times and got loans on it.
Well, which part did that? Western Alliance or?
That was Tricolor. Tricolor did this, and banks like Western Alliance were the ones lending the money to do that. So
Tricolor, you get to see the same loan in 3 different colors, right?
Yeah, Technicolor. So this is what's going on out there in the market right now, and that's why there's been some softness, and it's really showing up in a big way right here on this regional banks ETF that Spider runs. And you can see it's like since Tricolor blew out, this has been soft. This has been brewing, and it's still brewing. And that's what was showing up in VIX. Type VIX in the right order. This is what was showing up in VIX today too. This, for anybody that's, not aware of what's happening, why this market's being soft, this is the underpinning that's, got people shifting money around.
How does that look in the last 6 months? How high is this relative to its previous high?
And when we're looking back at April, here's April, and here we are. And this is a pretty standard place to top out. Right there. And we usually don't stay elevated but for a day. So if this is coming right back down on Monday, this event was just another event. If we start adding another leg, we might come up and get something worse up here. And this is just VIX, volatility index right here. And so that's what's, Jack, I mean, if the market moves for reasons, there's your reason. And it's probably not what's being talked about on CNBC today.
That's right. But let's take a look at one other thing. Let's take a look at the SPY in a 6-month look.
Yeah,
You
6
see
month look,
that last piece right there, since that big red candle, that just brought in so much softness. That dropped below the 23-day EMA.
it's all inside action.
Yeah.
It's all inside
within
last Friday.
It's all within the context of the trend, but it's just the first weakest link we saw.
All week we've been inside Friday's candle. Last Friday. All week this week. That's indecision for the market.
That's what that is.
We haven't broken back higher. We haven't broken down lower. We're not sure. Traders aren't sure. Big banks aren't sure. We're jockeying stuff around, moving money out of this pile, putting it in that pile. I'm not sure not sure what's coming next. So
I'm not either.
Yeah.
It could go either way from here. It wouldn't surprise me. It hasn't crossed below the 23-day EMA that I use in a while. Not like it has. It even hit the 54-day. So that's weaker than it's been in a long time.
And zooming out and looking at it, we might come back down here. Come retest support. Just on my technical analysis pattern. That's normal. We're up here and we're lofty, as Jack, to use your term. We've been lofty, and we've been lofty for quite a while.
Yeah, we have been. Doesn't stay that way.
We suddenly take these trips back down and reset everything. Then we go again, and then we suddenly come back down and test it. Like, this is the way the market works. Periodically, we come back and test it.
Yep.
Usually we get a little freak out somewhere in between. You can see here, we see here. So we may do one that's a little deeper and then go higher again and then come down and test it. So I was kind of expecting some sort of little freak out here into November.
Yeah.
Then rally on to new highs and then maybe go for a bigger, deeper.
In January.
Yeah. January or February, March, first quarter, something like that.
Yeah. And November is looking, I just remember a wicked pullback in November a few years ago, and it was kind of surprising in the midst of the run. So that is not ruled out. Spider Monkey, that's my granddaughter's wrestling name, by the way. But he asks, how's NVIDIA looking to you? NVIDIA looks good to me.
Yeah, I mean, NVIDIA is making the shovels and the picks and the buckets and the excavators and the...
No, they're going to own the entire ecosystem from soup to nuts.
And the only thing they don't, like, some of the, they build the... Actually, I guess they're building the back-end infrastructure and the AI models, but there's companies like... I found this one this morning that was interesting. these guys build the tools that Hollywood uses, and this is Autodesk software. And Hollywood's making the shift to doing a lot of their special effects with AI now, and Autodesk makes that software. And this is kind of the trend that we're seeing here off the lows. As soon as this breaks out, this could be a big upside opportunity
Yeah.
right here. Yeah, this has been an uptrend for a couple of years now. And if it breaks out in a big way, they just had an acquisition to bring in more AI generation, graphics generation in-house to
Now,
really goose up their offering. So
let's
it's a
take another look
powerhouse
at
there.
that is a powerhouse. I wrote that one down. Let's take a look at NVDA one more time. I want to make a huge point to everybody here. Now look at this in a 6-month chart.
Yeah, we'll pull in it's about 6 months right there.
Right. That's not a bubble. That's not a bubble. That's not what a bubble looks like. And that is AI. If there was a bubble in AI, you would see it in NVIDIA. It's not there. But it is out there in some quantum computing stuff and some energy stuff. There are some bubbles, but it's not in AI.
Now, what you see interesting to me, this came up, and we haven't really made progress since we hit
No,
this $4.5 trillion area
no.
of valuation.
Takes a
We
lot of money to push this now.
we've kind of hit that $4.5 trillion mark and just kind of been hovering right here. And when I look at the broader tech, layout, we're actually seeing people ease up on their exposure to the things that are at the top, just a little bit. You've got NVIDIA up here at $4.4 trillion today. We've got Microsoft up here at $3.7 trillion. We've got Apple up here at $3.7 trillion. We've got even Google up here in the $3 trillion club. Amazon is still down to the $2 trillion club. So you've got these companies right here. And we're seeing people, three of these are the big AI lenders. Apple, still the AR laggard. And they cut a deal with Google to kind of buy AI infrastructure. So you've got these companies here, and you're seeing people, if you go look at all of those charts, NVIDIA just kind of taking a breather. Microsoft also just kind of taking a breather.
Exact same thing.
Apple, even though it's not a big AI player yet, not really been breaking out, making a big run. This one's kind of been in a long breather. And for a good reason. It's not one of the AI leaders. And then one of Jack's favorite, Google. It was a late rally, but it's also been taking a breather for 2 months.
Ironically, I sold the 250 call that expires today. So, and look at where that thing has been waffling around. I got a lot of emails. Should we buy back the 250 call when it first hit 250? I said, no, let's let it ride because that's a big jump. So that's funny. We're it.
We're just sitting right at it. And, for a month or more, we've been talking about the fact that it might push on up to that 260 level. It got really darn close yesterday. Within $4. And this might need a little bit of pullback. Just like Microsoft needs, just like Apple needs. I mean, they all kind of need this little bit of pullback.
If they're going to go higher, they do.
Yeah. Yeah. What we're seeing, though, is Jack and I aren't the only ones that sit here and talk about this, that these are kind of lofty. The performance was here. That was 62% higher on Microsoft. That move. This on Google was pretty ridiculous, too. When you look at the move off the low here from April all the way up here, that's 79% higher.
Kathy,
that's a big lofty move.
People
that manage a lot of money are looking at how much they're risking for how much they're up, and they're resetting the risk, and that's what we're seeing right here.
Profit taking is kicked in. Kathy asked, "Am I going to let it get called away at 250?" Yes, I am. My cost basis is much lower than that. So if I get called out at 250 over the weekend, I would bet on Monday it would open lower than 250, and it'd be one of those sweet covered call trades where you get called out and get to buy it back the following Monday at a lower price. I think that would be what happened if I did get called out.
And
Either way, I'm going to sell another call on Monday. The only difference is if I own the stock, I'm just going to sell a call. If I don't own the stock, I'm going to buy the stock first, back, and then sell a call. But I'm going to keep doing it every month, like we've been doing. 3 years. It was in August. We've been doing this on one stock every month for 3 years.
and there's a chance that maybe you don't get called away.
That's what I'm thinking.
I mean, that's a pretty darn good chance here. If we haven't seen any afternoon softness today.
Yeah, you watch it's a good point you brought up about afternoon softness. This being the third Friday of the month. It's not the triple witching Friday that we'd have in September, but this is going to be a big wiggle uh, in the last 10, 15 minutes of the market. It's going to really get pushed hard one way or another, and that'll set up an amazing open on Monday. But I'll be interested in seeing where this one goes. And I'm out the 250 call there. The other question I saw was I sold the 170 put on NVIDIA and bought the 167.50 that
This
expires today.
is interesting. I look at this sometimes. This is based on option prices, which is what the market makers are kind of pricing this in at. This is touch percentage right here. And this is the percentage that from now till expiration, a certain strike price will be touched. Look at the skew right here. Right now, 250, which is $1 higher than what we're trading at right now, is 69% likely to get touched today. And it's kind of already been touched, but from now on, now to the end of the day, and it just dropped to 65%. This is a live based on prices. But look at the skew here. To go up to 255, you got 17%. But to drop down to 247, you got 25%. And 15 is down here at 245. $5 move down versus, $4 move up.
Higher odds.
Higher odds, the market's pricing in kind of a visit lower today than a visit higher.
So I'm going to let it ride. I would never buy back that call, that 250 call that I sold, just so everybody knows. I would never buy that back unless 250 was a price that was below my cost basis and I didn't want to get called out there. Then I would buy the 250 back today before the market closed. And on Monday or today, I would sell a higher strike price call further out in time. But other than that, I'm going to let it ride and see what happens. I'm good either way. It's a cash cow.
Yeah, it's kind of interesting when you look at that. And then you look at the puts too. You could see, and there's obviously a little bit of disagreement here slightly in the calls and puts about which way. And these will change live too. Like they're starting to balance out just a little bit. So
Very interesting.
It can be interesting to sit there and watch and see how the market, what happens in the market and changes the odds that the next move might happen.
And it's also a good way to start going down an options rabbit hole that you won't come out of till next month.
And, sometimes that's just the stuff I look at while I'm waiting to do a trade, waiting for the opportunity.
Oh man, I bet if I got close enough to you, I could hear your mind, the wheels in your mind.
Some people say they can feel the heat.
All right.
I got put shares last night, Jack.
Uh-oh.
On this one. A couple people wondering what we're doing.
What'd you take them in at?
I had sold the 17 put on CRCA. And I'm going to have I'm not going to be able to do it on camera because the account I got is on my Robinhood account and I am not able to pull it up on this studio computer. I have tried and tried. For whatever reason, it does not like whatever security certificate on this computer or whatever. It thinks I'm a scammer. Looks like I got 100 shares right here in this account. So I did it in 2 accounts. So we've got it right here too. So 100 shares, 17. We collected $1.80 when we sold that put.
So you're 15.20.
So 15.20, and that's still in the money. Yikes. right? Uh-oh. What are we gonna do? Uh-oh, uh-oh. Let me make sure I'm in the right account. I don't want to
Well,
do something in the wrong account here real quick. Just let me double check before. Yeah, I'm in the wrong account. Let me get in the right account. There we go. Quick double click. Trading and authorize the trading permissions for the right account. So I'm going to fly out to November. Now I have 100 shares. There's 17s where I got put. And wow, look at the premium. It's kind of ridiculous. I can get $100 more premium up here at 18. I can get, looks like almost $100 more premium at 19. Now there's not much volume on these options. I'm thinking maybe 18 is where I want to be.
yeah, or even the 16, because you would lower your cost again by, you're at 15.20, you'd lower your cost by another bone,
Yeah, well,
a dollar
selling
20.
this, so selling the 18, I'm above where I got put. That's $100 profit on the shares, plus the 180 I collected to begin with, plus the 130 I can potentially grab right here. For me, I think I might sell this one. We'll see if I can get filled here. And it looks like it's gonna give me a little bit of crap. Go 5 cents
Dollar,
less.
dollar and a quarter is awesome.
And filled. $1.25.
It's like a free $125.
I'm still above my cost basis. You know, my cost basis is all the way down to 15.20. I'm still above where I got put.
Lower now. You're down to
And
14.
yeah, now I'm down to, what is that, 14 even? Or 13.95. 13.95. Down to 13.95, which is
Hard.
right at the money, pretty much.
Yeah. Hard to
And
lose when you do it right.
I'm working that cost basis down to zero very, very quickly.
And you could on this one, seeing as how it started out inexpensive and you're getting over a buck a pop. Yeah, you could own this for zero. How crazy would that be?
To own a leverage ticker on
For
Circle,
free.
or on, yeah, Circle.
For free. You know that Chuck Crow did that on Apple.
Yeah, that's crazy.
It is. I mean, even Warren Buffett got his cost down to on Coke down to like 334.
So Circle did take a little dip on this softness in crypto. That's what we're seeing right here. But it's not breaking down yet. So we're still in a good position, I feel like, Jack.
I do too. I'm going to buy more, but I don't average down. So once it gets going, I'll buy a little more.
Yeah, I'm gonna sit on what I got for now. I did sell that upside call. If I get called out, no big deal. We'll talk about it again. But that's how you do it, everybody. That's what you do. Like you look at it, you evaluate. We have any questions about why I picked what I picked? You know, I could have gone below my strike I got put at, like Jack said, but let me go through that real quick, Jack. I mean,
Yeah, yeah.
I could have gone down to 16, maybe gotten, you know, right now it's only like another 30, 40 cents to reduce my potential profit by $200. To me,
That's not worth it.
it wasn't worth it to give up $200 on the upside because we're kind of bullish on this stock.
Yeah.
So it's not worth it to give up $2 in the stock price appreciation to only collect $40 now.
Correct.
And that's why I went above, because these premiums are pretty much the same all the way up through here.
Yeah. Folks, you
Why
got to
not?
love the thought process, right? This is how
Yeah.
you make decisions.
Yeah, this is how I make decisions. I'm walking everybody through it because maybe you don't have experience in this. Maybe you don't know. You know, Jack suggested I look at the 16, but you know, as Jack said, the wheels are probably already turning. There are, you know, the smoke's probably coming out of my ears a little bit. I already saw that the premium difference here wasn't enough to justify going down. Now, if this was like $4 here, that was $3 more, that would have been a better deal. But that's, you know, they don't have $4 here. If I could get $3 more for going down $2, that's a better trade-off. That'd be very rare in the market you could do that. And, I looked at this one up here. It's like, well, I probably would not have gotten filled for $1.40. I probably wouldn't have gotten filled for less than $1, more than likely, up here. And I just didn't, there was no volume here, is the other thing. There's volume here. There's no volume here. That means you're trying to push a strike that hasn't had any action on it today.
And the spread is too wide.
Yeah, the spread is really wide. So I went with the one that looked like I could get some action right there, and it worked out. And you can see all these other strikes up through here. There's no action today. That's the problem with trading a thinly traded instrument like this. But I did get filled. I could have gone out further, but the time value is not there either. This one only really paying $1.90, only 60 cents more for another month.
No,
well, I can collect $1 this month and then probably get $1 next month on that one.
Right. Doesn't pay.
So it wasn't worth it to go further out in time. Now, quite honestly, I had already looked at this a little bit last night or this morning before I came live because I wanted to be prepared to talk about it and what I might actually do. So I had an idea of what I was going to do. And the 18, I'm already in it. That's filled right there. I have the shares. I have the upside call. It's now a covered call with a commitment to sell at 18 if I get called away. Anybody have any problem, any question? Let me know now.
How about another naked put?
For me right now, I don't have the liquidity in this account to do that in this, in this particular instrument. So he said, I want to see this going for me again before I sell another put.
Mm-hmm.
I don't want to, right now, I don't want to add to my risk. If we start climbing back again, I may come in here and sell another put. I'm limiting my risk right now. All right. Put your trade in the chat. It is, I'll write it in. I had sold in October 17th, 2025, $17 strike put for $1.80 and got put the shares. Now, today, I sold a November 21, 2025. 2025. Come on, fingers right. Go in the right order. 18 strike. Call against. Leaving out letters. The shares. And collected $1.25 credit. There you go. That's what the trade is.
VG asks, when would you quit with a loss?
Probably if it goes to zero.
Yeah, we would just keep doing this.
I'm just going to, with my 100 shares, it's not a big capital risk right now. Right now, my capital risk is $1,300. Even if everything went to zero right now, I would lose $1,395. And yeah, I sent that to Jack instead of everybody. Let me repaste that. Let me paste it back in there. There you go. I sent that to Jack instead of sending it to everybody.
Thank you. I'll let them get in first.
So that, why am I only one contract? Because I'm willing to risk. I was willing to risk, $1,520 on it. Now I'm at $1,395. Even if everything went to zero right now, I already collected that $125. It's already in my account. If the shares went bust and they liquidated the thing, I will lose $1,395. Come November, if this expires out for zero and I'm able to sell again in December, that'll lower my cost even more, lower my risk even more. And as Jack and I were talking about, there's the potential and possibility that we work this thing down to zero risk or even a positive risk. Whereas if everything went to zero, I still made money. That's possible doing it this way. I had that in Red Hat that we talked about in a prior episode.
The red hat treatment. The underlying ticker, Maggie, is CRCL, Circle Internet, and the leveraged is the CRCA.
Now, Jack convinced me we should be bullish on this. I sold a put. I sold it back here a couple of weeks ago. I think on that pop day right there. And I sold it at 17, which was right at the money because I kind of wanted to get these shares. Quite honestly, I wanted to be gifted the shares in case we do this large upside potential.
Tony says collecting premiums to get to zero basis is the best. Yeah, it is. Getting paid to wait. Who would ever think that Wall Street would pay you to get a stock for free if you just stuck to it?
Yeah,
Hey,
CRCA.
speaking of stuck to it, I got to tell you, Jeffrey, I read a study yesterday and it reminded me exactly of you. This lady, Dr. Angela Duckworth, look her up. She talked about the key to success in super achievers and overachievers. And it had nothing to do with intelligence, although you are intelligent, or money, or any of these other things. It all came down to just two things. Ultra overachievers all have two things in common: passion and perseverance. When I think about what you did with put the red hat treatment on, that's both. And that's why you're an overachiever in the market. In addition to your intelligence. But I mean, you got those two things, and I just thought that I know a guy that's got that. In addition to myself, 40 years of passion. But yeah, you got all that and a bag of chips. Passion and perseverance.
Well, my follower Goose, Lieutenant Colonel Goose that follows me, we quote from him all the time on things. He said to me a couple months ago, he goes, the thing I like most about hanging out with you and talking to you and being your friend in the background is that you don't let not knowing how to do something limit your life at all. He's like, you just accept that you don't know how to do something or you don't know about something, and then you start trying to figure it out. You take the first step to chip away at it. And he's like, that's probably he's like, I've worked with thousands of people all over the world, and that's a rare quality in somebody. And I don't even recognize it myself. That's just the way I am.
Yeah.
So, I build all these systems myself. I do all this stuff myself. I love learning things. My wife says I collect hobbies for a hobby. So, I mean, that's, if you won't, my mother-in-law says that, we talked about this yesterday, I think, or maybe it was the day before yesterday, that the difference between me being an amateur or a noob at something and being a master of something is about 2 weeks. So
Yeah. I would say about 10 minutes, but she's giving you taking the long view.
I'm just a collector of knowledge. So
Yeah.
that's kind of what my hobby is just collecting knowledge. I just love
Very
it.
cool.
So
Yeah. I'm the same way, but only like when it comes to fly fishing, motorcycles, and trading,
high adventure fun stuff.
but not
Get
the
your heart pumping.
others.
Yeah, motorcycles, that's one of the things I've been warned about. All the rednecks are like, knowing your personality, you're gonna get hurt.
Yeah. Well, that comes with it. It's gonna go down. It's not a matter of if, it's a matter of when. You're gonna go. If you ride a bike, you're gonna go down. So, wear the gear, all the time. Hey, let's take a look at BWTX. Now, before we go there, let's go back to Circle 1 second.
Oh,
Now, he he's Jeffrey's doing it that way. I'm gonna nibble my way in to get a position to start selling calls against it. But longer term, I'm gonna play with this. I think it's gonna pan out, and I want to get that price appreciation, all of it. So this is kind of a new position I would be building to use this to hang on to it. And if it's trending higher and to sell calls against it, cash flow it and get the price appreciation. That's my plan with it.
now The leverage ticker, the warning here, if this were to drop 50%, very real possibility just to go back to the IPO. Think about that. If you take a 50% pullback on the underlying circle and you use 2x leverage, which is what CRCA is, what is 2 times 50%?
Mm-hmm. Adios, amigo.
I could very well lose my $1,395 if this takes a sudden 50% pullback. That's the risk. I was willing to accept it. All right. If you're not willing to accept that, don't follow me. Don't do that. Don't like, you can watch me burn it down right here live on Market Masters. It might happen.
I don't think so. But yeah, it could happen. There's a difference between possible and probable, right?
Yeah. This is a calculated risk. I think we're going higher at this point. I've kind of done some math on it. My technical pattern kind of comes in here as a measured bounce. As long as we're holding above this low that we made back here in September, the odds are with us that we're doing this. And that's a big number.
That's what I'm hoping on. Betting on.
So that's what we've got right now. Odds are with us. And unless we go lower low, and then, would I stop out? No, I'm just going to keep riding it because this could even come down here and it still be valid. It's just less awesome until we actually get that bounce and break out above this at this point. So this could be in the cards, and it's not a reason for me to stop out.
Good. All right. Now, last week you talked about BWTX and VRT. I wrote that down, and that's heating up a little bit. BWTX.
I think it was BWXT.
Yeah. It is heating up. Ooh, look at that gap.
Hot stuff right there. That pretty much filled that gap and then kept rolling.
Wow.
That one is aerospace and defense right there. That's hot stuff right now.
That's the energy thing, right? Portable energy.
Yeah, hot portable energy, aerospace and defense. I mean, it's this is rock and roll right here.
Any revenue?
Oh yeah, this is a good company. This is solid stuff right here. Price to sales only 6. Wow. 6.7. Their price to earnings a little frothy, but that just shows they're putting a lot of their earnings back into investment.
Yeah, revenue's going up. How about that?
They are carrying some debt. They do have some debt.
Yeah. Well, it's okay as long as revenue's going up, right? You got cash flow enough to service the debt, you're good. How's the beta on this little puppy?
All right, let's look at the beta.
Ooh, I love down days. If I'm gonna nibble for my first nibble, I love a good down day.
Beta is just a little above S&P at 1.1. Not smoking hot.
Pays a dividend, so you're gonna get paid to wait.
Yeah, it does have a fair dividend, 0.5%. Not great.
Yeah,
it's just a good solid play. Just a good solid play. It's not really like a banger play. It's not like super great premium type of play, but
no.
It's just a good solid performer types thing. So we can type this in BW, Bravo, not Delta. Put my fingers on the right keys here.
And once I get enough circle, I want to get a couple hundred, then I'll start selling calls at a price 10% higher a month out. So ideally, if I do it, sell calls in the month of October, they would expire in November with enough time for me to sell more calls in November that following Monday. That way I could do it 11 to 12 times a year.
Now this is a flag to me. There's not weekly expirations on BWXT. Now for you selling monthly, that's not a problem, but there's just monthly expirations. That means the options chain is going to be less liquid before I even open this up.
Yep. And not as good strikes.
So we go look at
That
the,
$5 difference is terrible. $10 difference in there. See, there's no way. I don't like $10 difference in strikes.
yeah, that's a big jump. So that
That's
means
too
there's
much.
low demand for these options.
If there were more demand, you'd see more strikes. But if there's not, they're just giving you an option to have a choice to do it, but there's no action in it.
Yeah, these are, not the worst I've seen, but there's just not a lot of players
Yeah.
in here. And there's low
Sometimes the
demand.
stock,
So
sometimes the best play is just buy and hold the stock.
I do like to kind of stick with stuff that has nice liquid options, though, because that
Hmm.
just gives you options on things to do if something's
Hmm.
not going the right way.
Cash
And
flow. Yeah, you might
cash
have
flow.
way more cash flow options when you got the weeklies in there. And it's
Now,
a sign of a weak options market if it doesn't have weeklies.
you could fly out here a year, more than a year, 455 days. You could buy a covered call right here. And
For
we
four
could
Gs for $4,400.
look at that. I mean, you could sell at the money 200 and get in for $160 a share, 161 or no, 159, excuse me, $159 a share. Buy the shares at the money, sell that 200 strike. You could even sell it slightly above and have the commitment to sell those shares 455 days from now. And you could do that if you wanted to. If you thought this was a good solid play, but you're committed to selling at 210. If this goes to 400, you're just committed to selling at 210.
That's the problem with being right and doing a long-term covered call.
Now you
You
could come
lose
all the way
all
up
that.
here at 290 and still get some scratch and have $90 of upside potential. Basically $110 upside potential. So these kind of things are out there. So it's not just a total loss. There's 79 contracts that have been traded. So anyway,
And
this wouldn't be for me, Jack. This wouldn't be my play.
yeah, mine neither. I just thought it was interesting. They were back in the news with VRT and BWXT.
Yeah, these are all like up and coming energy type stuff right here.
I'm long VRT, just so everybody knows.
That was a big bounce, and we're right at the resistance. And we could possibly see a little bit of pullback right there. Hey, Jack, we're going to make a format change to our show next week.
How so?
We're going to actually move platforms. So
Oh,
instead of
right.
being on Zoom, we're going to be in something called WisePub. And Sarah, I think this would be a good time to go ahead and play that video if you can or enable. We're going to play a little video for everybody. We're just going to take an intermission for a moment and show you about this new platform that we're going to be moving to next week. And then we're still going to be here every single day doing the same sort of stuff. And we're just going to give you a little primer. We're going to do this again next week before we move over to the platform. So we just want to get everybody up to speed on it before we do that. All right.